Valley Mega Mall and the Gardens Mall are two malls which are located in Malaysia. For those who reside in the central region in Malaysia, you would have probably been there. Do you know that you can be a partial owner of these two malls? At least theoretically. These two malls are owned by IGB REIT, and by investing in IGB REIT, you would then have exposure into these two malls. Welcome back to another episode of our REITs analysis series. Today, we'll be looking into IGB REIT, a retail REIT based in Malaysia. The REIT that owns the two malls, the Gardens Mall and Mid Valley Mega Mall, to help you better understand them. We will be covering a couple of things. We will look into IGB REIT business overview, its historical operational performance, its financial performance, and lastly, a few key considerations before you invest in them. Before we even dive into the content itself, let us clarify that we are not financial experts or financial professionals here to give you advice on whether to buy, sell, or hold any shares or REITs. If you are keen in investing in any of the REITs, please do your own due diligence and analyze them before investing in them. This video is only for educational purposes. In terms of the business itself, IGB REIT has a fairly simple business model, just like any other REIT. They focuses mainly on retail properties, in this case, Mid Valley Mega Mall and the Gardens Mall. The model is that they will lease out these two retail properties, which is the mall itself, to tenants, and in return, they will then receive rental income on a monthly basis. Let's look into the first mall, which is Mid Valley Mega Mall. Mid Valley Mega Mall is opened in 1999 and is currently one of Malaysia's largest shopping destinations. The center itself has about 6 trading levels and they have 11,000 parking bays. Mid Valley Mega Mall is a retail hub to a number of tenants with 4 major anchor tenants, which is Aeon Big, GSC, Aeon and Metro Jaya. The next property that we'll be looking into is the Gardens Mall, which is a mall that is also located in Mid Valley City. Now, the Gardens Mall are located just right beside Mid Valley Mega Mall. For those who have been there, you would have known. The Gardens Mall is also home to 2 popular departmental stores, Robinson and Isetan from Japan. So with these two malls itself, you would have known how prominent IGB REIT is in this retail space, given the size of these two malls. So they are one of the key players in the retail REIT industry, alongside other REITs such as Sunway REIT, KLCC REIT, etc. Now, looking into the trust structure itself, IGB REIT is managed by multiple parties. The first area that we'll look into is the trustees. The trustees is M Trustee Berhad, which you can see here. In terms of sponsor, they are well sponsored by IGB Berhad, which owns about 53.1% of the shareholdings in IGB REIT as at 31st December 2019. So for those that don't know IGB Berhad, they are a fairly strong player in the real estate industry. So if you're keen, you can read more about them, right? Then we move on to the manager itself. The REIT manager is IGB REIT Management Sendirian Berhad. So these are the person which will essentially make the decisions for the REIT. If you want to know more about all these stakeholders and how they interlink across the REIT, you can read more on one of our posts that we recently posted in our website. We'll put the link down below in the description box. And lastly, we will look at the property manager, which is Chartwell iTech International Sendirian Berhad, which is basically a party which would manage the property. They will source for tenants, they will manage the tenants, and etc. So these are all the few key players in IGB REIT that helps run the operations. To see how well a REIT performs, we have to first look into its operational performance to better understand how it has performed historically. Let's better understand the property itself. Looking at this extract from IGB REIT's annual report dated 2019, you can see that Mid Valley Mega Mall itself has a land area of 1 million square feet, whereas the Gardens Mall has about 421,000 square feet. This shows how big Mid Valley Mega Mall is and how much it contributes to the overall performance of IGB REIT. So this can be both good and bad. Bad in the sense that they have a high reliance on Mid Valley Mega Mall, and if there's anything that happens to Mid Valley Mega Mall, this could be potentially detrimental to the REIT itself and hence to the investors' overall REIT returns, right? That's one. Secondly, you have seen that the number of tenancies for both these malls itself amounts to about 800 tenants, plus minus 500 plus in Mid Valley Mega Mall, and the Gardens Mall has about 239 tenants. This is fairly scattered, which is a good thing because they do not have a huge reliance on one key tenant. Based on the annual report itself, the REIT manager has represented that no one single tenant represents 10% of the overall. Now, in terms of occupancy rate, which is the lifeblood of IGB REIT or any other REIT sector. Now, looking at the occupancy rate of Mid Valley Mega Mall, they have an occupancy rate of 99.9%, whereas the Gardens Mall has about 98.9%, which are overall quite high. To better understand its historical occupancy rate, we have also extracted this data from its historical annual report. Both Mid Valley Mega Mall and the Gardens Mall has been able to achieve a fairly stable occupancy rate in the last 5 years of above 97% consistently. Well, this is a plus point for both Mid Valley Mega Mall and the Gardens Mall. Let's look into its financial performance. There are a few areas that we will be discussing here. We'll start out with its historical financial operations. If we were to look into its historical financial operations, you would have seen that its financial operations has been growing from 2017 up to 2019. You would have noticed that every single segment of its mall, which is Mid Valley Mall and the Gardens Mall, are contributing positively, where both its revenue and net property income has been increasing year on year. In terms of its distribution per unit, it has been declining over the years, which is definitely an area investors should be wary about. Looking at its gearing, the gearing itself is fairly healthy at about 26%, with a loan to value of 23% in 2019. This is way below the permissible limit of 50%, giving them ample amount of debt headroom for further acquisitions or any asset enhancement initiatives. The final aspect that we will be discussing here will be the third quarter FY20 financial operations and its distribution per unit. Just by looking at the 9 months result of IGB REIT, it has declined by about 23% as compared to its preceding 9 months in FY19. This is due to the rental support provided to tenants and of course the lower car park income collected as a result of COVID-19 pandemic. And no surprise, the DPU as well has declined at only 4.67 cents in September 2020 as compared to September 2019. Definitely an area investors should be wary about. For those who are keen, you may visit our website at reitpulse.com, link down in the description below. We have few resources which we think may be useful for you in your journey in REITs investment. The first is the Guides to REITs in Malaysia and Singapore, where we share a little bit more about the REITs in Malaysia and Singapore and what you should know about them. If you are new to REITs, this is definitely a good read. It's free, so just go download a copy if you're interested in them. And for investors in Malaysia who are looking to screen REITs and would like a more comprehensive idea on the REITs in Malaysia, we have a REITs performance data pack, which is a paid resources where we have a great summary on all the REITs which are updated fairly regularly. Now that we have done with sharing about the operational performance and financial performance, here are a few key considerations before you invest. In terms of the positive aspect of IGB REIT, first positive aspect is its year-on-year improvement in financial performance, and that is before the COVID-19 outbreak. The second point is its strong operational performance, where we have shared that they have above 97% occupancy rate in the past 5 years. The third point is their two properties are strategically located in Mid-Valley City, which is a prime area, and the two malls itself is known to all Malaysians. It's one of the go-to mall in the central region. And lastly, they have a fairly healthy gearing level of 23% as at 31st December 2019. This will give them further growth opportunities in case the REIT manager would like to acquire new properties or perform additional asset enhancement initiatives. In terms of the negative aspect, the first will be that IGB REIT, being a prominent REIT in Malaysia, is fairly expensive given the popularity among investors. It is currently traded at RM1.72 as of 31st December 2020, and based on its NAV as at September 20 of RM1.06, this will give investors a price to book value of 1.6 times, which is fairly high. So if you're looking into this REIT, definitely an area to consider. Secondly, its DPU has been declining over the years, as shared earlier. Thirdly, despite its strong financial performance and operational performance, one area that we do not like about them is that they have a heavy reliance on Mid-Valley Mega Mall, where approximately 70% of its revenue are derived from this mall. If there's any detrimental impact on this mall, it could potentially be bad for IGB REIT overall. And lastly, investors should also be wary about the COVID-19 uncertainty in Malaysia, which could potentially impact the retail sector. We hope you find this video insightful and helpful to your investment journey. If you like this video, do subscribe to our channel and follow us on our social media account. Do also comment down below on this video to let us know on the REITs that you would like us to cover in our upcoming REIT analysis series.